Hey guys, sorry for the wait. Give me 1 second, let me just do a quick refresh here. Sorry about that, folks. Just had to start and restop the stream there. Okay, we're going to get started here right now. Looking at the markets going into this week, so we're pretty much the start here of, we're going to London Open for Tuesday, November 27th. And starting the week off, lots of volatility, lots of high impact news events this week. I'm just going to pull up a calendar here just to remind you guys what's happening. We're going to start off by we've got FOMC members speaking early New York Open Tuesday morning, and then we've got CB consumer confidence, and then another FOMC speaker later in the day, and then Australian dollar news. So we're going to see the US dollar probably move around a little bit, especially with this happening, and it's going to be a little bit later into New York. So we should see some nice movement happening. Going into Wednesday, we'll see some cable news. We got stress test results, etc., etc. U.S. prelim, GDP numbers, crude oil inventory. Then we got Fed Chair Powell speaking, and a private capital expenditure for Australian dollar late in the day to close off Wednesday. Thursday, a bunch of Euro news and some OPEC meetings all day. And then Friday, we've got, obviously, G20 meetings, Euro news, and Canadian dollar news. So we should have a pretty good week here for for some volatility being injected into the market with some of these news events here. So let's keep an eye on these. Going into, could be a pretty quiet London Open, but I'm going to kind of talk to you about a setup or two here in anticipation of this news happening. And we'll see if we can't get a couple of setups happening here. So just keep in mind, I'm going to say it again for the record, that it is technically holiday trading now. We're almost December. Might be a little bit of action left in the markets here, but for all intents and purposes, I think it's going to be pretty quiet. On the U.S. dollar, though, they've made a nice retracement down, back down off of this high here, and price is slowly starting to move its way back up. So I am anticipating a further continuation higher. Whether or not they get up into here is going to be another story, because we are going into a time of the year where it does start to quiet down a little bit. So keep that in mind. If we do see a run up in here, I would hope it would happen this week. So I'm going to break this down a little bit and just go into the hourly so you can see how we started off. Put the day dividers on so you can see how we started off here. Monday opened up, ran higher, came back down, and rebounded at the almost exact point that I had anticipated it was going to rebound on. And you can go ahead and take a look at my previous recorded video that I did on Sunday evening. And I'll show you exactly where this thing reversed before it happened. Price was like up in here or something like that, and I said price is going to come down here. It's going to reverse and it's going to start running, and that's exactly what it did. Now, I'm looking at some areas on the chart here, mainly right here. I think we've got a nice confluence of some levels up here that I believe are going to get tagged. So what I would like to see happen is I want to see if we can't get a rundown on the US dollar going into London, and then right around that 8:30, I'm sorry, not 8:30, CB consumer confidence comes out at 10 a.m. New York time. So right around that 10 a.m. New York time, I'm hoping prices are going to trade down to here, and then we'll start to see this happen right around when that news starts to filter out. So that's sort of the setups that I'm looking for to happen. And if we lose if price wants to come deeper than up in here, so you can put a price tag on that. We're roughly right around the 96.70 level to 96.75. And get that. There we go. I could see it coming a little bit lower than 96.75. But that's a pretty good gauge as to sort of where I'd like to see the market start to shift. If we go any lower than that, keep an eye on this low here. We could sink below that. There are a couple of levels, and I've got this dotted line right here. The 96.55 level, really I don't want to see that broken. If you see price coming down past 96.75, you know, you can give it a couple of pips, 5 pips here or so, here or there, maybe 10 pips on the high end, or on the low end, I'm sorry. Yeah, 96.50 would be about the very lowest I would give it. I don't want to see price come all the way down here, because if it does come down to 96.55, then there could be the opportunity for it to sink underneath this line here and want to come into this area down here, and I don't want that. You know, if it does happen, I would be looking for a reversal, and not to say that I think it's just going to keep falling lower. If it does come down into this area, I just don't want to take a setup on a cross pair in anticipating that we see the bounce up here. Because obviously if we see the bounce, if we're anticipating the bounce at 96.70 and we're doing a cross pair trade, let's say on the euro, and we're anticipating a similar bounce at a very similar location, and then the US dollar starts to drift lower, then that obviously is going to run out any potential stop that we've got on that cross pair. Even though the price may come down here and still want to do this, that would be a deeper retracement than what I was anticipating on. Sorry, folks, I've been fighting a bit of a cough here the past week, so if you ever hear it go silent there for a second, it's because I'm either clearing my throat or coughing a bit. So, like I say, I'm going to keep an area open here. I'm going to be watching this 96.75 and seeing what the willingness to continue lower is. But if I don't see, if I really start to see price slowly make its way down here, and what I'd like to see is price just slowly make its way down here, all through London Open and going into New York Open. And if by New York Open we haven't reached this area here, then I'm going to think that the likelihood of them bouncing price in this 96.75 level is going to be more likely. If, however, price really starts to scream lower, and we're into early London Open and price is at this level or below, then chances are it's probably going to continue to drift, and then New York Open is going to come, and we could see that low set in New York. I don't believe price is going to come any lower than this small consolidation level in here. I think this is going to be, I think this line is going to be held up in terms of some kind of a support level. So, but there is the off chance that price could come and trade down to it. So just keep that in mind. Have a watch. I would suggest normally just if you can't be in front of the markets during New York Open, you know, just put a limit order on and put a fairly tight stop on. But I think I would just elect on this one just to say, let's just watch price and just see sort of where it goes. So in terms of the easy money this week, I'm just going to anticipate a run above these 3 highs in here. I don't want to see price go. I wouldn't hold on to hope that they're going to run out this high right away. It might do that later on in the week, I don't know. But for sort of a one-day trade, an easy in, easy out, I'd be kind of looking to take my profit up in this area in here. If you can get a move up there, I definitely would take that and would call it a day. Okay, so that's about what I got to say on the U.S. dollar. Now, if we switch over to the Euro USD, we have a very similar trade setup, mirror image of that. So as you can see, price has been dropping down quite steadily for the past, 3 months now. about to come to an end in that conclusion, I think. And I believe we're going to see price potentially jam down here to the, I'll just zoom out a little bit here for you guys, right down into the, somewhere between the 110.20 level and the 111.20 level. So about 100 pip radius in here, I think, is where they're going to eventually try to push price down. May not get here this year, but I think going into next year, who knows? Well, we could see that coming in and maybe even hitting the low of the year, and I don't know, maybe we'll get lucky and get a long-term swing trade in, and maybe a bounce higher above here if we see a reversal. Not going to worry about that right now. If you are a member, you will be getting a long-term analysis for our members for a pair like Euro, of course. And I'll make that available here over the month of December, because trading does slow down in December quite a bit. So the live analysis is really not necessarily it's wasted, but it just, if you're looking for signals or something like that, I'm not going to be giving any signals on a regular basis during December, because it's too quiet and choppy of a period. It's not high probability. So again, if this is not the first time you're hearing about this, sorry, I'm just got to cater to some of the new people that could be here. So just so you know, during December I'll be putting out, I'm going to try for a daily video, recorded video, on all the different commodities, and I'll just kind of run through all the different categories of commodities. So just for an example, yeah, and I'll get back to the charts here in just 1 second. I just kind of had a thought in my mind that I wanted to talk about. But if you look here, so if you go to something, for instance, just a free resource, free commodity resource, it could be anything. In this case, I'll just, whoops, show you this here. So if you look at this, you see all of the commodities are grouped into categories: grains, energies, meat, metals, meats, softs, indices, currencies. Obviously, you got all your bonds, the financials, and then I don't talk about any European funds or markets or anything like that, other than the Euro USD. What I'm going to do is I'll go through all of these categories, all of these groups, and I'll just do a real short analysis on the major ones. For instance, wheat, corn, and soybeans. Those are major ones. The rest of them I don't worry about. And then I'll kind of pick out the leading commodity of that group in terms of what would have the best probability of a setup going into next year, and I'll give you some in-depth analysis on that and give you what my opinions are. The same thing with energies. I'll analyze the crude oil market, obviously natural gas, and then the metals we'll do obviously gold, silver, and copper. Those are the standard ones. We'll do live cattle, fetal cattle, and lean hogs, and then all of the softs except for lumber. Lumber is a fairly, I don't know what the word for it is. It's just escaping me. Not illiquid, but the volume. That's what I'm trying to drive at here. The volume on it is spotty, and you don't see a lot, nice smooth price action on it. So I'll leave lumber out, and then I'll talk a little bit about the S&P, or I might even get Dave to do an analysis on the S&P, to do maybe the 3 indices going forward, and then I'll do probably just Canadian dollar and the Euro USD, maybe the pound. We'll see, but just a couple. So, like I say, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Basically about 20 commodities. I'll do a quick analysis. Sorry, 17 commodities and a couple of Forex pairs. So that'll all be pre-recorded for you guys. It'll be a setup for next year, and I'll post those onto our member forum. So if you are a member, you will get those. If you are not a member, if you're just on our YouTube channel, joining us because you like some of our analysis and you like to see the market directional bias and everything else, unfortunately you will not get those videos. But if you would like to see them, then you can just simply go down here, see in the bottom right hand corner of my screen, to f45trading.com, and there's several different options on there that will get you a membership for that. And I'll be releasing those throughout the month of December. I'm going to try for just about every day if I possibly can. I might do 2 in one day, but we'll see. I just kind of want to keep the videos short, about 15-20 minutes each, and sort of wrap them up. So okay, with that being said, sorry about that little interlude. Talking about the Euro USD, so just a real quick recap: looking for a move lower and then an ultimate move push higher on the US dollar. Looking for the same thing on the euro, and we had a nice steady decline. Took out a previous low here, big retracement, almost took out this previous high up here. I'm going to get rid of this. Might have to zoom in a little bit on that. There we go. So I believe that the time to go higher on that was on this drive, and I believe if we were going to go higher, it would have done that, or at least come down, retraded back into here, and then pushed higher. And as you can see, we made another new low coming under this low in here. So I don't see any major levels of support in this block of price action in here that would warrant a big reversal to happen. So, and again, this is mainly trading off of the US dollar bias of running higher. I'm looking at this saying, well, the low end of this thing is down here where a lot of liquidity rests, and they had the opportunity to go down here on this last swing low here, which they failed to do so. And so I believe that they are now, if you look from this low here to this high here, this is the 50% range, this dotted line right there. We're well above that now. And so I think the easy money, or the easiest path of least resistance on this would be to move up here into these higher highs here as opposed to moving down here. So I think the opportunity to go lower is gone, which is why I'm leaning to the fact that I believe the Euro USD is probably going to ultimately go lower because it is typically a mirror image of what the US dollar does. So if we see that happening, if we drive down to a lower time frame, we do have some levels on the chart that I want to bring your attention to, and mainly it is right above these two equal highs right in here, and I'll just kind of draw that out right here for you guys. I think this is where we're going to head, and I think it's going to go into here during London. Now this again is where I'm going to just advise you to go back to the US dollar and really watch that. So if we start driving down here during London Open, and again we're getting close to that news event during New York Open, and we have not gone lower than this tiny this 96.75 is what I was saying. If we haven't gone lower than that, and we're coming up to that news event, I would expect the Euro USD to sort of be hovering sort of in this area in here. Now if we continue to pass this area, and so let's just line that up perfectly here for you so you guys can really see this. I want to make sure you know what we're doing here. Okay. So right about where this blue line is, which it comes in at 113, call it 113.60. Let's make that a nice a nice even number. If you see price coming up to 113.60 here and starting to hesitate or lower, then chances are we're not going to stretch for these two equal highs here. And I believe they left these two relatively equal highs above here for a reason. But again, if we don't see this push down lower than here, we could see Euro pause at this level in here. Now there could be a bit of a divergence. The other case on this is, because you always got to have a a couple plans of attack. A couple of routes of entry. So if you do see the Euro USD pushing past 113.60, US dollar, however, is really holding up, taking its time, and not wanting to go lower than this 96.75 level. then you could have a bit of a divergence happening, in which case Euro USD is going to run these highs, take this out, and this is definitely going to be the failure swing in here, and then you're going to see price cascade lower. That would be a great trade if you could get in on that. Tuesday creating the high of the week, and then price falling out, and look how they've really sort of left these, it's not exactly equal lows under here, but they've really left and built the market under here. So traders who are going long are going to sit here and think, well, you know what, let's get in on this long, and I think this thing's going to go back up above this high here, and this was, you know, this was a nice bullish movement higher, and this is just a short-term retracement lower, and oh look, this is support in here. Let's go ahead and get long right here and jam my my sell stop right underneath these lows here, and they're going to come run price up in here, and these guys are all who are long thinking, yeah, this is great. You know, I'm making tons of money. I'm going to hold out for up here and up here and up here ultimately, and then they're going to run price up here. They're going to hit the stops, and they're going to trigger the sell, and price is going to come ripping back down here. And I think that's their ultimate goal on the week, is to get lower and get underneath this level here. So we'll see what happens. The opposite could be true too. You know, like I say, you got to have a couple of entries, you know, in case one doesn't pan out. You know, don't disparage, because there's always levels where prices wants to get drawn to. Right now, I think it's going to want to get drawn to the upside. So my first level that I'm going to be watching at is 113.60, and if price wants to get there, this is my next level right up in here, which would be 113, you know, 85 to 113.90, maybe even 11400 on the high end. Could get run up to. I doubt it. I don't think there's enough Euro news to drive it all the way up there. On Tuesday, no, there's none. The next big Draghi speaking on Thursday, but I think price is going to be well under here on Thursday. So keep an eye on Euro for that. So long story short, looking for this and a continuation lower, and if it doesn't do that, it could do this. Okay, so one of the two levels is going to get hit, and a reaction is going to ensue at either this level here or this level here, and then price is going to fall out, and I think we're going to really rip hard underneath these lows here. So, okay, I can't be any clearer on that one. Hopefully that makes sense to you guys. Now, one last thing. So, if you do get in on this area here, so let's say price runs up and you decide to get in at I don't know, 113.55 because you're worried about your spread, you're gonna have a pretty decent stop, a pretty tight stop is what I mean. I probably wouldn't give this much more than 113.70. You know, I'll leave that to your discretion, because if they do get all the way up to 113.70, they're definitely going for these highs, and they could just do a real quick 10 pip stop run and then drop it. So if you got in at 113, you know, 60 or 113.55 or whatever, do one of two things: either keep a tight stop and don't let it go above this candle high here before it exits you, and then wait and then try and re-enter again on the false run up into here, and then get your trade lower, or put your stop in above 11400. So, but that's a pretty big stop. Like, that's a 40 pip stop, 45 pip stop, and for a lot of you, your risk to reward ratio, that's not going to pan out. Obviously, we got to keep at least a 2-to-1 minimum risk to reward ratio. And so if our target is 113 and potentially 11300 on the low end, that'd be the target. About a 10 to 20 pip stop run underneath these equal lows is what I'd be looking for. So I'm going to put that on here. This is my target. And I wouldn't hold out straight for this. If you see price going down to 113.05 or 113.10, and you see some hesitation, take some off, obviously, or take off the whole trade. You don't always need the full 10 last pips, but it's just it's a personal preference. So if you got in at this level here, that'd be about a 60 pip target to the downside. And so if you had a 40 pip stop, that's less than a 1 to 2 risk to reward ratio. Or sorry, that's greater than a 1 to 2. So that obviously doesn't work for my numbers. I don't know what you guys do personally, obviously, but for me, I want to have a minimum 2 to 1 reward to 2 to 1 reward to risk ratio. So if that happens, I'd have to get in here, and I wouldn't have any higher than a 30 pip stop. Okay. Now, if I got in up here, just above these equal highs here, let's say we did a 10 pip run. So let's say 113.90 price came up to, and I got in at that. Then obviously I could easily have, because that's about a 90 pip run to the downside, I could easily put a 30 pip stop, which would be just above this high here, then that's a 3 to 1 reward to risk ratio. So those are the numbers. Down and dirty, nice and simple. Again, this is holiday trading. So, to be honest with you guys, we may not get anything like this happening. Price could just come and just steamroll right above here and go up into this range in here. So I'm definitely not going to recommend you have a big stop. And I certainly would highly recommend you just do a demo trade. Do not trade live funds. And if you do trade live funds, I would always use a stop, and I would dial back your risk significantly. So if you're used to trading one standard lot, I would literally trade one mini lot if I were you, like 1/10 of your original amount that you would risk, just because it's holiday volume. Price could not want to do anything. Price could just sit here and just go sideways for the rest of the weekend, and then into December and not go anywhere. You know, there's that option as well too. So but if you do get a good entry and the trade does go in your favor, make sure at plus 30 pips you take some profit and you move your stop to break even, and then it doesn't matter what price does because you've paid yourself a little bit, and if you do get stopped out, you don't lose any money and you still remain profitable. And that is the name of the game, folks. It's not how many pips you make. It's not holding out and hitting these big home run trades that you're getting 100 or 200 pips every trade. If you can get that, great, but it's staying profitable. It's taking money off of the table when you get it, when it goes in your favor, and always paying yourself small chunks along the way and avoiding big stop outs. That can't stress that enough. So I hope that makes sense to you guys. Pound dollar. This one here, price is really accumulating right now. I don't have any real opinion on this. Could go low, could go higher, could go lower. I think if they were going to take it higher, I think they probably wouldn't have taken so long in here, unless they're building up for something and then they want to rip this higher. But look at this big move last week. And if you saw any of my live sessions, I mentioned this to you guys and what the opportunity there was. But I think if they wanted to continue to take this thing higher, she would have gone already. So kind of leads me to believe that maybe they're taking it lower. But I'm not going to be trading this pair. If you do trade this pair and you are looking at going short, and let's say you do get an entry, I'd probably be looking at getting an entry somewhere in this neck of the woods. I know that's a big range. I'll try to dial it back a little bit for you guys, but the 128.30 level to 128, maybe 45 level. If you see price go up in there, I would look for some hesitation for it to fall off. But if you saw price go any higher than this high right here, then I would not be holding any trade for any hopes that this thing was going to go down. I like that it's going down because they haven't really come down to take any stops. As you can see, they left them here, 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 and here. And whereas opposed to this big swing up in here and all of this crazy stuff in here and this big stop run here last week, I believe they're ultimately going to run these two lows down here. So if you did get in, I'd look at doing something kind of in this neck of the woods here and then take that thing lower. But keep a very tight stop on cable, and just bear in mind, I'm going to forewarn you right now, don't be surprised if you get some stuff like this happen. I personally wouldn't trade cable at all, because again, look at what's happening on Wednesday. We've got the Bank of England stress stress tests going on here. Can't speak today. So you got to watch for that. Okay, that's all, and I'm not going to talk about cable anymore because, again, I'm not trading this pair. I highly recommend you don't trade it either. But if you are, that's kind of what I'd be looking for to happen, and anything other than that, who knows where it would want to target up in here. I don't know. Euro GBP has kind of been sitting sideways for the past little while, so it's waiting for something big to happen. So we'll wait on that one. More than likely, probably a draw lower, but they really haven't taken any stops above the market here. So price has been down to the lower ends of the market and gathered up a lot of positions in this area. So don't be surprised if this thing just starts pushing higher. US CAD, I don't know if any of you trade Euro GBP, but that's just my thoughts on it. US CAD, I set out a couple of trade ideas today on US CAD. If you were part of the membership group, you would have gotten that. But long story short, I am looking for higher prices on US CAD, only because US dollar is going higher as well too. And however, I think there's an opportunity here if we do get a deep retracement in the US dollar, where we could see the Canadian dollar coming, and maybe possibly small chance in them running these lows down here. It's a very, very small chance. Be a beautiful trade if you could get that. But that's a big drop on Canadian dollar, 70 pips. And quite frankly, there's no Canadian dollar news until Friday. We have GDP meeting minutes on Friday, and I don't think they're going to hold this thing in consolidation until Friday's news comes out. So more than likely, I will probably see them fall off. But I'm not expecting a real deep retracement. And I say that now, I don't expect a real deep retracement, and it will come all the way down here or something like that, and then it'll rip higher. But long term, my targets are 133.85 on the high side for US CAD, and only because of this nice big long run up here. And as always on the downside, if price comes in and it wants to start to run lower through this consolidation area, so if price does trade under here, I'd be expecting a real quick 10, maybe 20 pip stop run, price to reject immediately, kind of like one of these long wick candles right here. I'd like to see that under there, maybe potentially take out the lows from here, but then stop and reject and then run higher immediately. Kind of like what you saw right here. See how price came, stabbed down. Let me just, you see that price came, stabbed down, took the lows under here by, I'll bet you it's probably about 10 pips. 15 pips, right in the middle. Ran the lows and rejected. That's exactly what I'd like to see here. Come down, run those lows, quick 10, maybe 20 pips, reject, run higher. So again, but if we trade lower, if price starts coming lower and getting into this purple box here, the likelihood of them running that back higher is getting slim to none. So just be careful on that. So you can use that as a stop loss. If you do trade Canadian dollar, I don't know. A couple of trade options there for you guys. So, but ultimately, like I say, I think that I think we're going to go higher. I think this 133.85 is on the menu, and we're damn close to it too. I'd like to see this happen. Like, we're only 140 pips away. I'd like to see them do that before the end of the year here. I think that'd be great. Japanese yen, US dollar, Japanese yen. Same type of idea. They did, however, leave equal lows under here. Just prime. There isn't any yen news actually this week. I don't see anything anyways. So it's kind of interesting. So who knows what we're going to get with the yen. It is entering back into a consolidation area, so it could just kind of sit and go sideways for a little bit. I don't want to see them come any lower than 113.10 on the low side. Basically right where this blue line is. If they do come lower, again, same type of idea as the Canadian dollar. Real quick stab down, rejection, and then a run higher. But I'll be honest with you, I don't even think we're going to get that deep on the yen. I think, I mean, it might for sure, but on the high side, I'd be looking at this as my target, 113.80 on the high side. And I think that's just a you know, a nice easy target to get on the yen. Let's say price does come down here, and let's say it loads off of this area in here. You know, that's a nice 40, 50 pip trade on yen. Easily doable. Average daily range on the yen is, well, this was a big daily range here. That was 70 pips there. But we don't have massive ranges on the yen. It's there, you know, between 70 and you know, 100 pips type of thing. So that'd be a nice sort of daily range on the yen if you could grab that. If you guys are a yen trader, I don't know. I'll leave that up to you. And crude oil. Bit of a bounce on crude oil. So it bounced about $1 in it for the day so far to start out this week. Price came slammed down on Monday at 15. The low on that was $50.05. Damn near broke $50. So I hope that's the low. You know, they're coming dangerously close to running out this low here. You know, again, OPEC meetings are coming in soon. They could start to run price higher and start to build in the production decreases early on. I don't know. All I want to see though here on this guy here is some failure swings lower. So what I mean by that is I'd like to see them run price up into here, come back down, retest this area again, fail to go lower, and then that's when you can get in and go long. That's anything other than this same scenario happening, I'm not too interested in it. So just going forward, keep that in mind. There could be lower prices to come on crude oil, and you definitely don't want to be in the way of something like this, trying to pick the long, or sorry, pick the bottom and go long. So sorry guys, my cough is starting to drive me crazy now. So you know, going down to an hourly, again, Monday came in, made the low, created a bit of a gap. Price filled that gap fairly quickly, and so far has failed to go above this 51, 52 level. Other than a quick, you know, 1-2 up and then back down again. So I do like how price is rebalancing at this level here, though. So we'll see if this line here wants to get broken to the downside, and that comes in at 51, basically 51 even. So if price does if price doesn't want, if price comes down and trades lower than 51, I wouldn't be interested in it. If it does trade lower, you can probably go short again. I'm kind of thinking that this could be the low on the week, but I don't want to stick my foot in my mouth and say that and expect, again, trying to pick the low when so clearly it's evident that there's a lot of areas below here. For instance, the 49 level, $1 lower, that I think could be calling its name. Ultimately, though, this 42 level could be a very, very strong level that could be pulling price down to. But we're going to have to wait and see what's going to transpire. If you're looking for a bounce and a retracement and a trade longer, if price fails to go below 51, then great, you might be able to pick up a long, and I would probably pick a target, very, very close term target, at somewhere right around 52.80, and then I'd be out. Hey, if you can grab $1.80 on that, great. I mean, all the power to you. But just watch price, because if it starts to drift below 51, then that 50 level is going to be a very, very slippery slope. And again, 49 could be on the menu for this week, so keep that in mind. And then alternatively, if price does, however, breach this low here and we get something like this happen, then we may be able to get in on a short, but only until that happened. And I would have my stop very, very tight. I'd probably put it right above that swing high there, and really 30 tick stop, and I'd I'd look for price to continue down and not come back up at all. So that's sort of what I'd be setting up on the menu. Monday could have come in here, created the high of the week, and and then it wants to seek lower prices for to finish off the week. So we'll watch for that. But I'm kind of like the cable. I'm just going to be staying away out of crude oil until those OPEC news events have happened, and then we can start looking for markets to start to shift. But just keep in mind there is a bearish seasonality on crude oil, and this is historically speaking until this date right here. So we're well away from that. We're still 1, 2, 3 weeks away from that. So lots of time for this thing to continue to go down. The other thing is too, this thing could go straight sideways. That's the other option for it, obviously. So you know, there's always 3 options for a chart. It's up, down, or sideways. But again, crude oil does show bearish tendencies until this time frame in here. So for this thing to go lower wouldn't be a big stretch, to be honest with you. And look how quickly it's been getting down there. So, you know, 49, even 52, or sorry, 42. It could be seen here pretty soon. So watch for that. And guys, I apologize. I wanted to go through a couple more commodities here. I wanted to talk a little bit about gold, a little bit about S&P and copper, which is, look at that, copper, just as of now. I was just looking at this here about an hour ago, and price was sitting consolidating. Look where they're running this thing. Could be an opportunity on copper. Looking for this low to get swept here. Looking for that as the target. And I think we could see price rebalance somewhere right into this level right here. And may be able to pick up a long. Watch this area here, guys. For our members, I'll keep an eye on this as well too. We could just see a real quick rip below this guy and then a reversal. But I like how price is falling off here. So we'll see how deep they want to take this. And that's about it. I don't. My voice is starting to go and starting to cough really bad here, so I can't do any more analysis. I would love to do it and sit with you guys for a little bit longer. I think it could be a pretty quiet London Open, just so you're aware. So keep that in mind. And I think all the fireworks is going to really start happening in New York. So Dave will be back on Wednesday. He'll be trading S&P and gold and a couple other markets for you guys, so you can watch for that. I'll post the link when he comes on. And then I'll be back probably Thursday for London Open again to cap off the week, and for myself, and then Dave will be back on Friday. And that'll be about it for our regular scheduled live trading sessions, because we are then into full swing December and holiday trading. And it's also non-farm payrolls next week, the end of next week as well too, so keep that in mind. But that'll be the end. Again, this week will be the end of our live sessions until next year. And I will come back, though, with you for every day and posting a recording on what I mentioned before. So hope you guys watch that. If you're not a member, again, check out f45trading.com and sign up to get those pre-recorded videos, because I can promise you those are going to help your trading for next year and help you become more profitable. So with that, guys, I appreciate your time. Thanks for joining me, and we'll catch up to you on the next one.